Hey everyone! I know you want to hear me say to you that interest rates are coming down, don't you? And maybe when you've heard about in the recent past the Fed cutting their rates, you got really excited and went, yes, finally, cheaper mortgages. But here's the thing. The Fed doesn't actually control mortgage rates. In fact, there are so many factors that impact our interest rates, such as job market, inflation, global events, you name it. And while rates will likely come down over time, it's going to be a little bit of a roller coaster ride. So instead of waiting and hoping, let's talk about what you can control. Let's talk about getting the best mortgage deal possible. And that's why I love this week's blog. That is titled Control the Controllables, Navigating the Mortgage Rates Like a Pro. So if you haven't read it, go back and read it, or just listen to this video because we're going to be talking all about that. Okay, let's jump right in, you guys. I'm Katie Evans, owner and lead agent of the Living 48 real estate team. Welcome back. First thing that we're going to talk about this week in our Control the Controllables is first, you have control over your credit score. Yep. Credit scores play a huge factor in determining your mortgage interest rate. Even the difference of just a few points means saving or paying thousands of dollars over the life of your mortgage loan. So according to Bankrate, the higher your score, the better your term. So if you want a lower mortgage, here are three things that I want you to do. Number one, check your score, check for errors, and if you find errors, I want you to fix those. Number two, pay your bills on time. Even small late payments are going to hurt your credit rating. Number three, keep your debt low. Okay, especially those credit card balances. I want those kept really, really low. So if you're not sure where to start or if there's more intensive fixes that need to happen to your credit score, I want you to talk to a trusted loan officer. If you don't already have one, I do. Let me know and I will help get you with them, and then they are going to help you get back on the right track. Okay, the second thing that you can control is the choosing the right kind of loan for yourself. So not all mortgages, not all loan programs are created equal. Did you know that there are three different types of mortgage loans? And they all come at different rates. They all come with different rates and terms. Did you know that? Yep. Here are the three main ones, the big ones, okay? Number one, you've always heard about conventional loans. Yeah, everybody knows about a conventional loan, but did you know that they are the best if you've got great credit and at least 5% to put down? They're going to get you the best interest rate. Now, FHA loans, these are good loans and they're really good for people who have lower credit scores, but they come with mortgage insurance or PMI for the life of the loan. Okay, so that adds a little extra to that. Now, there are also VA and USDA loans that are special programs provided by the government that you may or may not be qualified for, or in the case of the USDA loans, the house may or may not be qualified for. These special programs actually come with lower or no down payment amount. So those are kind of cool options. But your loan is going to significantly, the type of loan that you have is going to significantly affect your interest rate. So work with your lender, figure out which the best kind, and your real estate agent can also help you find out if it qualifies for the USDA, those kind of things. And then you're going to find the best loan program that's going to fit best for you and what you're trying to accomplish. Okay, the third controllable that you have is to pick the right loan term. Term means the length of time that you're paying off your mortgage, right? Okay, so that term, how long the mortgage is for, also is going to affect how much you're paying and the interest rate. So most people go with a 30-year loan because it keeps your monthly payments lower. But did you know that a 15-year loan comes with lower interest payments? and lower interest rates. Did you know that? You are going to pay less in interest overall if you choose a 15-year loan over a 30-year loan. The shorter the term, it equals a higher monthly payment, but over the long run, is a huge financial savings if you can make it work. So the more that you can afford as far as a payment, the shorter the term of the loan, it's going to actually potentially save you thousands and thousands of dollars. So again, that's one of those things. Run the numbers with your lender, see if it works in your budget, but that is still a controllable that you have. So bottom line is this: we can't predict mortgage rates. They are not coming down to the threes and the twos, maybe even the fours in our lifetime. But there are things that you can control, and those are the things that we're going to focus on. We're going to focus on boosting our credit score, getting that all where it needs to be. We're going to focus on picking the right loan program for ourselves and our situation, and then we're going to pick the best term for our loan that we can, and that's going to help us save a lot of money over the long run. So if you need help figuring this out or you have any other questions, please feel free to give us a holler, give us a call, send us a DM, send us an email, a text, whatever is convenient for you. And my team and I here at the Living 48 Real Estate team are just waiting to guide you through it. So drop us a comment below. If you want and you have a question that you think might help other people, put that question back down there as well, and we will answer that for you. But I'd really like to know, what is your biggest concern about mortgage rates? Let's talk. And if you haven't already, do me a favor, give us a subscribe, hit that bell so you hear about when other videos come. If you're getting this on social media, give us a like or a heart, throw a little comment down there, share this with somebody that you know might find it useful. As always, we really, really appreciate you watching our videos, and we'll see you in our next one.